for you to be happy and understand. So no need to keep it yourself. If you have a question, just bring it out, and that will be fantastic. So you have a question, please feel free to tell me, and I'll be more than grateful to be able to discuss with you. So let's look at, we are looking at this beautiful question right here. We want to mention that this is a budget question. In the exam, usually the budget question should be the question you're doing at last. That is my simple advice to you. Partly because it's a bit involving and there's a lot of unnecessary things. So you may want to do it at the end after you've dismantled other things. But again, I must tell you that if you don't answer this question, there's a higher chance that you will not pass. And the examiner wants to make sure that you understand this topic before you go anywhere. So whether you're doing F5, whether you're doing CA 2.2, DA9, the principles still remain the same. So there we go. We've been told here, guys. Remember, we are going to go with the Lusambo way. Now, the Lusambo way is the free way, all right? And it states that to every exam answer will give rise to 3 levels of sense. Level 1 is more sense. Level 2 is less sense. Level 3 is nonsense. So avoid levels. You must think. Make sure your answers make sense. So the Lusambo way tells you that you must always start with the free marks first. Always start with the free marks. So here we've been told to explain some of the benefits, and we've been told to prepare. See, there we go. Prepare the cash budget. So it's a cash budget we are looking at for HCO in respect for 6 months. So it's going to go on for 6 months. And I gave you a video that talks about budget tricks. So I don't expect any problem when dealing with a question like this one. This one should be a walkover. But this says HCO has constructed a cash budget for the forthcoming year, which shows a negative bank balance. Again, of course, we are going to talk about this one. If you have a negative bank balance, what is that? For 4 consecutive months, what does it imply? So you're having a cash deficit in the short term. So 2 ways by which the company may overcome this situation. What do you do if you have a deficit in the short term? How do you borrow if you're going to borrow? What do you do? How do you deal with your suppliers? How do you deal with your clients? So we'll be able to talk about this one. Now, the advice in the exam comes from the scenario, from the numbers you've worked. The general things could be, for example, we do lead and lagging. Where you say, no, delay payments to what? To suppliers. Then quickly get money from your receivables or customers. Those are general statements in the textbook. You know, in the exam, you must point at something specific that this company needs to do, and it's always in the exam. Forget the book. But sisters, briefly at the term budgetary control. Can you believe that? Very dongalistic. Budgetary control. We talked about the purpose of budget last time. We said that there are only 2 reasons for planning and for control. Those are the major reasons. Then these others like authorization, motivation, coordination, they are secondary to those 2. So this one is extremely dongalistic, and we don't really care because we know we are going to hammer it. So note 3 advantages normally associated with what? Effective budgetary control system. These are the things we talked about last week. Give an example of each with understanding. Can you believe that? Very, very easy indeed. Explain some of the benefits and potential problems of ZBB, zero-based budgeting. This is the things we were talking about the other time. What are the benefits? What are the problems? It's about the suitability as well of zero-based budgeting. When is it suitable? You know, dynamic environmental conditions where projects are changing from year to year, then we may want to use this one. But also this one eliminates inefficiency. So we'll talk about all those kind of things. But in the meantime, let's get back to the main meal. So tonight, this afternoon, we're not going to start with those theoretical aspects. I want us to first calculate, and then we are going to explain the theory bit. So, but in the exam, always remember to start with the theory bits. All right, guys. So prepare the cash budget. So we are preparing cash budget for how many months? For 6 months. 6 months. So we have this question here, HCO. So 6 months, we've been told 6 months, starting what? 1st July. So our budget begins in July. So 6 months, so from July to December. So we are starting from here up to December. So July to December. All right, so common sense tells us that, you know what, this examiner is playing Tom and Jerry with us, and we're not happy about that. So let's show him that we don't tolerate Tom and Jerry type of arrangement. So the first thing you do is make a format, guys. Make a format, because the format never changes. The format is always the same for budgetary questions. So once you make a format, then you can begin to post those free dongolistic marks. Make the format first. Always make the format first. So let's do the format. Now, what we do here, I'm gonna go to the sheet. I'm gonna go to our Excel sheet so that we can make our format quickly in the sheet, and then we may be able to see how we can shame this examiner. Can you believe that? That's our target, to make this examiner feel like nobody. Yeah. So let's make it feel like that. Let's see how we can make this guy feel like nobody. Yeah. So there we go. Okay, good. So we are going to go somewhere here. I'm gonna say what? Okay. So we'll continue with the same sheet. I'm using the same sheet because I want to print it out at the end of the revision, so you can have answers that are printed. Maybe look at them at your own convenience. All right. So we have the cash budget there and things like that. Okay. Okay, so what we have, we are going to make the format. Now the format remains the same for the cash budget. Always, what we do is simply say half of course months, as you may be aware, we are going to start with months. So how many months are we talking about? We are talking about months starting from July. We have July. We have July, of course, we have July. November up to December. So those are the months that we are talking about. So we have all those months, but also we have the years here. Of course, here we have, of course, the year is 20x4. Yeah, so we don't care so much about the year. We're just going to bring in the quarters. So we know that here we have, of course, and things like that. So those are our quarters. Okay. Okay. Right. So we have quarters there. So just for us to know that they are quarters, they're in thousands. Yeah. So what we are going to do now, we have quarters on top there. We're now going to bring in other dongolistic stuff. Now let's bring in our receipts. So cash budget, remember what we did when we did how to prepare that master budget. We said after it has been accepted by Mwenyewa that she prepares the cash budget, a forecast of how they're going to spend, where they're going to get the money and things like that. So what are their receipts? Now receipts, here we talk about things that come from customers. So here we're talking about customers. Those are your clients. People that buy from you are the ones that give you receipts. They're the ones that give you the money. So your customers, you must be able to bring in your customers and anything that you are receiving. So the first thing you do in the question, go and identify your sales. Identify your sales. Identify anything that is bringing money into your business. Anything that is bringing money into your business, identify it. Have you seen? So what do? You quickly go back so guys, I want you to open your questions. So I can be asking you, just tell me to avoid switching back and forth. So identify anything that is, of course, giving you money in the notes. So we've been told that this guy is a retail organization, so meaning they sell stuff according to the examiner, and then we've been told that has gathered information about the likely activity of the company for the remainder of the calendar year. This is summarized below. We don't care. Then we go on to check the notes and see our sales. Our sales are our receipts. HCO has got the following sales. Notice sales. For each month, we have, see, 250, 270, 300 sales are right in front of our nose. So those are the sales that you're looking at. So we have all these kinds of sales. All right. So we're starting from July, remember, from the 310 here. But for cash budget, there's always a trick, you know. So you can't just go and fish answers and paste them. No, you don't do that. So you ask yourself, if you sell in July, when are you receiving the money? Because remember, the format shows you're not posting sales, you are posting receipts. When are you receiving those monies? But anyway, because I'm such a very nice man, just to help you, let me do this. Just to help you to avoid making a mistake in the exam, I'm going to do this. I'm going to go back to our sheet, and I'm going to add a line just to help somebody. So those are receipts, so of customers. So what I'm going to do, so writing customers, I'm going to say sales. I'm going to say sales units like that, and then I'm going to say, of course, I'm going to say value, just to help someone understand what's going on. Those are the receipts. So the units, tell me what units are you selling? So remember, always put a month before, like we discussed, and a month, of course, after. This should be for next year, January. Yeah, just in case, always put a month before and a month after. So what we are going to look at here now, what are the sales? Tell me for July, guys, quickly. What are the sales for July? Sales units. Sales units for July, guys.
310.
310. Let's go to the next one.
360.
360. Next one.
290.
290. All right. Next one.
240.
40. Let's go. Next one.
180.
180. Next one.
280. 280.
280. So these are our sales. Okay. These are our sales. So that is the format. But if your observant should have seen that in this question, what we have been given are not the units. The examiner are just giving us money. Have you seen it? That's why I had put just sales at first. If we had known, if these were units, I was going to say sales units, and then we say price, and we say value. But for the purpose of this question, see, I'm deleting value there. So now I'm going to introduce that other word that we said, receipt. So we're going to say now a receipt. When are they receiving? This is why I'm bringing that other word back now. They sold in July, August, and things like that. But when are they receiving those monies? You're supposed to know when they're receiving monies. Very important. So let's go to the question and see what the examiner says about when they're receiving. There's always a trick on when they're supposed to receive. Don't be in a hurry. Otherwise, you will find yourself paying for exam fees again, which will be very stressful, to be honest. So HCO buys its inventories. Notice what the examiner says 1 month before it expects to sell to customers. Can you see that? They buy 1 month before they can sell. You know what that means? It means whatever they sold in May was bought in April. All right? They buy 1 month before they can expect to sell.
Yes.
Then suppliers allow HCO 2 months credit. So the suppliers allow them to pay after 2 months. Now assume that you're standing on the first day of the month when you're buying. Please mute yourself. You have to assume that you're standing on the first day of the month when you're making the sale, so that you can count from that month, the month end month, and next month becomes second month. In the day, after those 2 months, the third month you get your money. So you have to count like that. So there we go. So we've been told that the company has a policy by which it sells its inventory at a markup of 100%. Full stop. So if they sold goods worth 250, they sold at 250, how much was the cost of these goods? Have you seen? That means the cost of these goods was how much? Was half that price. Because their markup was 100%. So what you are trying to know is to know how much you owe the suppliers. You owe the suppliers half of whatever you are selling. Because those 100% markup. So what do? You continue reading and say HCO allows customers 2 months as expected. So this company, when they sell in May, they allow their customers how many months? 2 months credit. So what you must assume here, guys, you must assume that you have something like this, and you have these months here and these months there, and things like that. So let's say where you are standing somewhere here. This is May. So assume that you are standing at the first day of May 1. So if you are going to allow 2 months credit, that means you are going to pay when? You are going to count from May 1 to May 30th. That becomes 1 month. That's how you count. Then you go to June 1. Again, you continue there. You're going to go, of course, to June, of course. June 1 to 30th, that becomes 2 months. So May has passed. June has passed, 2 months as what? As elapsed. Tomorrow morning you'll be when? You'll be in July. Have you seen? So you're going tomorrow morning in July. So you're going to pay that 250, the one that you sold in May. Tomorrow morning in July 1, you receive your money. That's how you count months. Assume you're standing at the first day of the month. All right, because I'm such a wonderful man, I'm going to post these figures now. So the show goes on. So the one that you sold in May, you receive in July. The one in August, and then the show goes on and on and on. Believe me, at this point, the examiner is in love with you. He wishes you were his roommate. So this examiner is hoping you are his roommate, because he's so much excited with what you're doing in this exam. So what to do here now, we go on and say, okay, in May, so I'm just going to add May here for somebody to know how the sales went. So in May, the sales were 250. In June, tell me for June, guys. Tell me for June. Guys, tell me for June. Sales for June?
270.
270. So what we do, the one that we sold in May, we are receiving when after 2 months in July. The one that we sold in May, we are receiving in July. 250 comes in July. Have you seen? 270 goes where? In August. 310 goes there. And then the show goes on and on and on and on and on until we are no longer excited. So the examiner is just in love with you at this point. So there, don't confuse sales. When you're making the totals, remember the only money you have is 250, 270, 310, 360, 290, and 240. Those are the only monies you have at this point. Then you are supposed to go and look for something that is supposed to bring money in your company. Usually look for what you sold. It could be something that an asset that you sold, it could be a bank loan, something like that. Look for anything that may bring money in your business and bring it or inflows. So let's go and look at that question and see if there's anything that the examiner is telling us I was able to bring money in our business. Yeah, so what we do, we go back to this question and then we say, what, examiner, we don't care what you think. We go to note number 1. What are we being told in note number 1? We are being told that in note number 1 that note number 1 is done. Okay, expenses incurred by the firm are fairly consistent and will totally approximate. So forget cost for now. Just focus on the receipts. This includes wages, blah, blah, blah. We don't care. We leave it. Note number 2, HCO expects to buy new non-current assets. No, this is an expense. We leave it. These are paid for in the blah, blah, blah. We don't care. HCO as a liability, HCO company tax liability of 360. We don't care. So for now, don't care about anything that they spent. All right. Just look for anything that they may have received. So HCO expects to buy a new machine costing 340 during September. We don't care. These will be paid for in the same month, and during this time, HCO, during this time, a bank loan of 70 will be received. Very good. So we have a bank loan. Anything else? You may mute your speaker. We're able to hear your secrets, please. Mute your speaker. We can hear your secrets. So HCO's company tax liabilities are 360 in respect of its financial year ended. Okay, we don't care. The company expects its bank balance to close at. Okay, we don't care. So we all have one receipt from our clients and also from the bank. So what do? We go to the bank. We can hear you. Please mute your speaker. Mute your speaker, please. So what we do? We go to our sheet, and then what we do? We are going to post the 70. Notice, when is the 70 coming? Which month is this? September. So we're receiving that 70. So we go to September and post that amount of money. At this point, you are excited. You are singing songs of praise. You wish you are texting your best friend who did not write an exam because they said they were not feeling too well. Maybe they were just scared. Then you wish you texted them to come back and write. Yeah. So now we know that, of course, if assets, of course, what we have now, we know we have a bank loan. So what we do, we go to the bank loan down the receipts. Then it's okay. We have a bank loan, and then that bank loan is coming when in September 70. So next, what do? We make our totals. So here we are going to make our total. What's our total receipts? But remember, the examiner marks totals. I'm making these totals for the purpose of learning. The examiner never marks totals, just so you know. So there we go. So here, look at our totals. Don't make a mistake. Make no mistake here. Our total is 250. Of course, our total now there changes. From we have 270 here. That's our total. Here we have 310 plus 70, 380. That's our total. Here we have 360, and then here we have 290. Then there we have 240. Make no mistake. So you are done with the receipts. At this point, your heart is just jumping around with joy because you know you're passing the exam, and you're disappointed you failed it the previous time. How easy these things can be. So let's go, guys. Next thing you do now, you go and look for which ones? For payments. So it's okay, fine. I'm gonna go and look for payments. So let's see what are my payments. All right. So those payments, all you do something like that. So you go to your payments. Now your payments, you know, you have suppliers. Those are the people you pay. Have you seen common sense? Apart from suppliers, of course, you know, you're going to have wages, like salaries to pay people. Apart from that one, you're going to have apart from wages, you're going to have of course there will be other expenses and things like that. So you know, the exam has given us all these things, as you can see in the question. What else do we have with this exam? We also have what the exam has given us, non-current assets. So the exam has given us non-current assets. Anything else we have? We're supposed to pay tax. Anything else the examiner says we're supposed to pay? Nothing else. So then here we jump a line so that we can now go to what is called net. So that's our net. That's our net. All right, so that is when you're there. Yeah, let's mute you. Let's mute you. Let's mute Mwenya, guys. Somebody mute Mwenya. Can you hear what was it? Somebody mute my ear. Okay. Okay, there we go. Successfully muted. Okay, anything else we have our net. Now, on our net there, of course, we're now going to have opening what? We are now going to have opening balance. We're going to have balance brought forward. We're going to have bank balance brought forward, but also we're going to have balance carried forward and things like that. So we're going to have the carry forwards like that. Okay, let's go and look at these things in detail. So we're just going to read once and then we'll post them. So you guys keep posting these numbers as we'll be reading them. So let's go and look at these numbers and then be able to post them quickly. Okay, the examiner says that he has the following, as you guys can see here. What does it say? This guy says this. He says expenses incurred. Now, not what it says to suppliers. It says HCO buys its inventory 1 month before it expects to sell. And then our markup is 100%. So what that means, it means that whatever we are selling, we are owing half of it to our suppliers. So we are going to go back to whatever we sold, half of it is what we are paying our suppliers. Okay, so there we go. So what we have now here, we have whatever we bought. So let's go back here. Let's go back here because we are being given 2 months credit. So if we have suppliers here, we have 250. This is what we bought. Okay, we sold it here. Let's go to the same thing we sold. If we sold 250 and suppliers are charging us notice 2 months credit, and we sell 1 month before we buy 1 month before we can sell. So whatever we sold in May was purchased when? Was purchased in April. So you have to start counting from April. April 1 to April 30th. That is 1 month. May 1 to May 30th. That is 2 months. June 1, you must pay the suppliers. So you must remember that. So let's go to our suppliers. So our suppliers, whatever we purchased, how much are we paying our suppliers, guys, in July? So this 250, remember that 250. The 250, half of the 250 is being paid when? Is being paid in June, 125. That 125 is not what we're looking for because the examiner says our monies should start counting from when? Our budget should start counting from July. Have you seen? So the 125 is not, that does not matter. So the 270 now is what goes in what? In July. Guys, is that okay? Guys, is that okay? Confirm with me before we move on. The examiner says they buy their inventories 1 month before they can expect to sell. So if you sold in May, that means you bought 1 month before. Have you seen? In April. And then you have 2 months. So you have April and May. June 1 you are paying. So that 250 will not appear on our sheet, the half of it, because it was paid in June. So what is going to appear instead is the one that we bought in June. Have you seen? The one that we bought in June. So let's go, guys. Well, how much are we putting for July? When you divide by half of that, how much is that? Guys, help. How much? What you sold in June, it means whatever you sold in June, this is you bought it when? 1 month before. So it means this was bought in May.
So here it's going to be 135.
Okay. So what this 270 was bought in May. Then you have May 1 to May 30th. Then you're going to have June 1 to June 30. That is 2 months. July 1 is supposed to pay half of that. So what do you have? 135 there. And then the show goes on and on. That means the next one is of course going to be 155. The next one is of course going to be 180. The next one is of course going to be 145. Yes, please. The next one, 120. The last one.
Why are you dividing by 2?
90. Why are we dividing by 2?
Can I answer?
Why are we dividing by 2? Yes, you can answer. Please go ahead.
There was a note that said the company had a policy which where they sell the inventory at a markup of 100%. So meaning the cost is half of the 100%.
You are awesome. See, you are awesomely fantastic. So see, we were not given the costs of these inventories by the examiner, but the examiner told us the markup. So if when we are selling, our markup is 100% on these sales, which means we are making times 2 what we bought them at. So we have to divide. And then we are being told we are able to, we buy our inventories 1 month before we can sell. If we sell, we're selling in May, that means we bought that in April. Very important point. Next expense we have, our expenses incurred by the firm are fairly consistent and will totally approximate how much? 93 per month. These are the expenses, total 93. This includes wages and salaries 68 and allowance for what? For depreciation of how much? Of 7,000. So from that 93, we have wages and salaries are going to be how much? 68. And then dip is going to be how much? 7. Then what is for the expenses? Then the expenses are going to be about 63 plus 7, that is 75. 75 plus minus 93, that leaves us with 18. So you have to split those expenses into 3. For salaries, for depreciation, and just for what? Just for expenses, actual expenses. Extremely dongalistic indeed. It has never been this easier before in the exam. So let's go, guys. Let's look at our wages. So our wages, the examiner says our wages are what? Are paid when they are incurred. No trick on wages. All you do is simply pay them as they are incurred. So we have 68. Of course, 68, 68, 68. So there we go. Those are our wages. Our expenses, of course, expenses we have 18, and then the examiner says, you know what, 18, 18, 18. So what do we do? We bring them like that. Okay. How about our depreciation? DIP is a non-cash item. All right. So for depreciation in the exam, you may do something like this. Yeah, you may bring in DIP here and say depreciation, but don't add anything. So for 0, 0, nothing, huh? Because DIP is a non-cash item. So don't. So just show the example, you know what you're talking about. DIP is 0. DIP is not money. So don't put anything on depreciation. Just put new. For non-current assets, how much are they buying this asset? The examiner says they are buying an asset of when in September, how much? 340. We go to September, and then we are paying for 340. Yeah, in September. Then they also have company tax. They are paying for tax when in September again. How much? Anything else that we have? Okay, now we can have our net. What is our net? So we can now have our total expenses. If you add 135 plus 8 plus 18, that obviously gives you 221. 221. That gives you 241. That gives you 9. That gives you 231. That gives you 206. That gives you 176. Can you believe that? Yes, you can. So you have your net. Have you seen? That is your, let me just say total receipt in short, total payments, just for us to be very clear. Total payments, all right? So now that we have our total payments, what is going to happen? We are going to simply say, okay, let's do this. So we're going to insert a row here, and then we are going to call it net deficit or surplus. So we're going to have something called net deficit. Of course, we're going to have a net deficit or surplus. Okay, so what is our net deficit or surplus? So here now, our net deficit or surplus is going to be something like that. So how much is, when we remove 221 from the 250, we get the total payments, we remove from the total receipts to see if we have any money remaining. What we paid for, we remove from what we received. 250 minus 221, we have 29. There, 270 minus 241, we have 29. There, 380 minus 960, a negative balance there. So we are closing with a negative balance of how much? Of 586. Next, 360 minus 231, we have 129. Next, we have 290 minus 206, of course, that is 84. Common sense tells us it's easier to work out. 240 minus 176, we have 1964, at least 64. All right, so there we go. So now, we're supposed to get our balance brought forward. The money we came with from the bank, how much is that, guys? What have we been told we came with, we opened with? What have we been told we opened with in the equation? We opened with how much?
37. Huh?
37 with a positive balance or negative balance? Positive or negative balance?
Overdrawn. Negative.
So it was overdrawn. 37. Have you seen? So we came with the 37. Okay. So 37, that means 37 from 29, we will still close with how much? How much of 8? So we still were able to close with a negative balance of 8. Can you believe that? I think that is quite awesome. So negative balance of 8. All right. So what we close with is what we are going to wake up with tomorrow morning. Tomorrow morning we wake up with 8. And then that 8 is negative balance from 29. We are going to have 21 positive balance. Then tomorrow morning we wake up with how much? With 21. That 21 is a positive balance, netted off with a negative balance of 86. That is going to be 565. Still a negative balance there, 565. Tomorrow morning we are going to wake up with how much? With a negative balance of 565. And then we net it off with 129. Main things are bad, we have 436. Another negative balance of course, 436. There we go. Next, what do we do? We're going to wake up in the morning with a negative balance of and then we net off with 84. We are going to close with 352. Another negative balance of 352. Next, tomorrow morning we wake up with the negative balance of how much? Of 352. When net it off with 64, we are closing with a negative balance of how much? Of 288. So that means the question is done. It never gets easier than this. Just doing this in the exam, someone runs away and said it was complicated because of not being observant, not remembering what we are talking about, counting months and things like that. So watch that video I prepared for budget tricks part 1. Go to our YouTube channel, search for private tutor SL, and then search for budget tricks part 1 in our videos. There we have explained, I have explained all the tricks that the budget brings. The majority of them I've explained that one. So if you watch that video, there's a higher chance you have no problem dealing with questions on budgets, either functional or cash budget. So we are done. Now we want to go to our and say, so Mwenya, tell me something. You know, what do you do in a situation like this one where you are closing with a loss? So what this company has, as you can see, they are closing with a short-term notice. This company is closing with a short-term what? Short-term deficit. They have a deficit in the short term. It is not the full year, no. It is you know how many months? 1, 2, 3, 4. So 4 months. That's a short term. Yeah. So the operation hasn't been so nice. It has been very. They all made money in August. They all made money in August. So at the moment, they don't have any money. All right, so there you go, guys. Okay, so now let's go and answer that question from the exam. So this exam at this point is in love with you. He wishes you were his sister or his brother because you are just being awesome. So the examiner can't help it by just sing songs of praise, even telling people that he knows you, telling his fellow markers, I know this person. Yeah. So explain the term budgetary control. But this one says H was constructed the cash budget for the forthcoming year, and which shows a negative bank balance for 4 consecutive months. Have you seen? So the examiner knew. Imagine you found positive balances. The question is telling you 4 consecutive months. So suggest 2 ways by which the company may overcome this situation. So how many? Which of the 2 ways this company can overcome this situation? Which of the 2 ways? Now, the answers are always in the exam. From what you've calculated, from what you're able to notice, how can you overcome those problems? Look at the notes. This company, to start with, they opened with what? A bank balance which was negative. The bank was overdrawn. Have you seen? Their bank was overdrawn by so they had the negative balance of 37. But just after 1 month, they go and buy a very expensive non-current asset. Have you seen? They go and buy a very expensive non-current asset. Why didn't they wait? So they should have delayed the purchase of that non-current asset. Have you seen? This one, they should have delayed because they didn't have money. So they bought it and they didn't have money. They even went to borrow a further 70. This was bad. So what were they supposed to do? They were supposed to delay paying parts of this particular non-current asset. What else do you think they should have done? These guys are not. This company has got dongoristic kind of managers. Why are we saying so? Look at them. Their suppliers are giving them how many months credit? 2 months. Have you seen? Their suppliers here are giving them 2 months credit. See? The supplier says you're going to have to pay me after 2 months. How about them? How many months are they giving their clients? 2 months. Can you believe that? Even then, they are giving their clients 2 months. It's making sense. You are paying your supplier after 2 months. Your clients also paying after 2 months. So for them, they were supposed to reduce the payment to clients to 1 month, not to 2 months. Have you seen that? The payment terms were 2 months, not 2 months. So you're supposed to advise based on what you're able to see. Or if they couldn't, if it's difficult for them to reduce payment terms from their clients to 2 months, what they could have done, they could have negotiated with their suppliers to be paying them after how many months? Maybe 3 months, extending the payment period to suppliers. So there's a difference when you're receiving and when you're paying. That's what you do in the exam. So in the exam, you do that, guys. You don't want to be found wanting, laughing about in the exam and things. So that, guys, and that makes quite a lot of sense. So you're supposed to give advice based on what you're able to see in the scenario, in the things you've worked out. See, that's what you're supposed to advise. You're supposed to advise something like that. All right. Anything else? Yes, there is something else. So you guys, if by any means you have a question, I'll be more than happy to just explain. That's my job, to explain things. So I'm always happy to explain. But C says, guys, briefly explain the term budgetary control. Guys, I can explain that one because we discussed this one in our sessions. Budgetary control. What is that? Remember what we said when we did the theories? We said, what are the most important control measures of budgets? Why we even do budgeting? Two important things to achieve by budgeting. Aside other things, two important ones. Two important functions of budgeting. What did we say, guys? Tell me two. From the main we talked about, but just two. I even told you these two must not miss.
Planning and control.
Yes, let's go.
Planning and control.
Very good. Planning and control. Planning and control. So how do we control? What do we control? What do we say we control here? What are we controlling? What are we controlling next? What are we controlling? What are we controlling? What are we controlling? We said we are controlling costs, guys. And what method do we use to control costs? What did we say? Guys, what did we say we do to control our costs? What method do we use? Guys, Shalom, Mr. Tawina. What method do we use? I remember telling you this very well last time. Guys, suit yourselves. So we said we use variance analysis, all right? We compare actual results with budget. That is budgetary control. Simply a method that companies use to control their costs by comparing our budgetary results with the actual results. You get that 2 marks and then you move on. Just like that. No pressure at all. Anything else? Yes, there is something else. Something else the examiner says, no 3 advantages normally associated with effective budgetary control system. Give an example of each which we are straight understanding. So how do you use, how do companies benefit from this system? What did we say? So here, number 1, effective planning, we say it helps management institutions where expectations are not being met, which allows them to take remedial actions as soon as possible, because you can see things are not going according to plan. Let's do something about it. We also said that being able to use budgeting as a control tool, this one allows them to prepare for the future business requirements. For example, if there's any increase either or reduction in capacity, labor, inventories, or anything like that, market demands, things like that, then we're able to plan properly. Because we're able to see, before we come up with a production budget, let's look at demand. What's sales demand? What's the demand like? So you can say a lot of things. But we also say a budget can act as as a benchmark. You know, against which lenders are able to do what? Are able to get information necessary for making what lending. You can't go to the bank and say you want to get 20 billion US dollars when your budget is simply 500,000 US dollars. The banks will refuse, but your budget is just 500,000. Why do you want 20 billion for what? Yeah, something like that. Last but not the least, the examiner says explain some of the benefits and potential problems of zero-based budgeting. Zero-based budgeting is suitable in situations where projects change from one period to another. And one of the benefits is that this one eliminates slack. It is an efficient tool of also reducing unnecessary costs. Zero-based encourages a questioning attitude. Have you seen? It encourages employees to avoid wasteful expenditure, because every amount you put in the budget must be justified. You must explain why. Have you seen? But also, this one helps the companies to respond to changes in the environment, unlike incremental budget, where you simply keep on adding up every single time. This one responds to changes where. But the bad part here, a lot of people are under zero-based budgeting, too much work. Also, this one is very much time consuming because it requires expert knowledge. And because it requires expert knowledge, some managers who are less qualified may be discouraged, may be demotivated. So managers under some circumstances may resent being continually questioned about how efficient they utilize their resources. They want to feel, but every time they're asking us, they become, they don't want something like this. Have you seen? Yeah. Okay. You can send those love again. Somebody sending me some love. That's fantastic. I'm an awesome man. I'm an awesome man. You can do that again and again and again. Yeah. So, guys, we are done with this question here, and I'm extremely excited. I'm happy about what we have done so far. So, I want to say thank you so very much for joining me this afternoon for this beautiful question. So now let me give you an assignment that you're going to do right now. As a group, of course, no one should leave. So you're going to stay here and do this assignment. So if by any means you have a problem, you can ask. Is there anybody who has a question, any contribution, or anybody else wants to tell me? Any question, contribution, songs of praise? Yes, guys. Any question, contribution, anything? Are we safe? I need some feedback, guys. Are we okay? Moelia, are you safe? Is it so hard to click on the speaker and give me some feedback? Is it so hard to? Yes. Oh yeah, good. Sharon, are you okay? Guys, give some feedback.
Yes, sir.
Yes, sir.
I'm okay.
I'm okay.
All right, Mr. Tawina, are we safe? I want some feedback.
Yes, we're safe.
Safe. Okay, anybody else? The two of you, GU and GU, please put your full names. Are you guys safe? GU and GU, guest, put your actual names. Are we safe? Are you okay? because I have a question for you that you need to do just now. So are you safe, guys? Guest and guest. It should not be hard to just click on the icon and then respond. It should not be so hard to do that. To be honest, it should not be so hard. So I want you to do this one as an assignment. Question number 36. This one you submit as an individual on your own. So you do this one alone. Submit before class tomorrow morning, tomorrow afternoon. And then I want you now to be able to do this other one, question number 38. So you're going to do question number 38 as a team. And then question number 35. Okay, question number 36 and number 38, you're going to do them as individuals one-on-one because they are quite less involving. Question number 37, you're doing it now as a team. So do this one now as a team, the Brotherhood Company. See, it contains two things. It contains you preparing the cash budget and also some fantastic outlines there. So do this one right now as a team. That's your assignment. Okay, so you do that one as a team. Remember what we have talked about. Don't forget, because you need these tips. Okay, you need this one. So guys, thank you so very much. Everything is being recorded. If you want to watch, you can always come back and watch at your own convenience. Thank you so very much, guys. I will leave you here for now. And I'll be able to see you. I'll be able to see you soon. I'll come back to come and check what you are doing. So as a group, question number 37. Thank you so much, and bye bye. I'll see you soon in the next few minutes. I'll come back.